You run a business, most days are pretty routine, but here's something worth asking yourself before something forces the question. If someone got hurt at your place tomorrow or a small fire shut you down for a couple of days, do you actually know which policy kicks in and what it covers? Or would you be scrambling to figure that out when it matters? If you're newer to owning a business, not knowing is pretty normal. If you've been at it a while, the gap usually shows up when your business has changed but your insurance hasn't. On a typical day, nothing wild happens. You unlock the door, your team shows up, customers come through, deliveries arrive, and everything runs like it's supposed to. Could be a storefront, an office, a workshop, whatever. The point is, it's familiar. The risks are there, sure, but they're quiet. That's why insurance fades into the background once you've got it set up. Most business owners don't wake up thinking, I need to go get a business owner's policy. You end up with one because something practical requires it. Your landlord wants proof of coverage before handing over the keys. Your lender needs it tied to a loan. A client contract mentions liability somewhere in the fine print. What you're really doing is making sure you're covered when something interrupts that normal flow, not just checking a box. In practice, a business owner's policy, or a BOP, is built for that everyday reality. It assumes you've got a physical location, some business property, and people coming in and out. Occasionally, something small throws things off, and the cost of dealing with it matters way more than what actually happened. Take a retail shop. Someone walks in, looks around, buys something, leaves. That's most visits. Every once in a while, someone slips near the door when it's wet outside or trips on a mat that got bunched up. Not the end of the world, but now there's a medical bill and probably a claim. At that point, you're not thinking about coverage theory. You just want to know who's handling it, how fast, and whether this turns into a bigger problem. At the same time, your business runs on physical stuff: shelving, inventory, your register system, signage, coolers, whatever fixtures make the place work. A lot of that is expensive to replace even though it feels ordinary. A small electrical issue, water damage from next door, someone breaking in overnight, none of it shuts you down permanently, but it does mess up your week. Repairs take time, equipment needs replacing, and you might lose revenue even if actual damage is manageable. What a business owner policy does is bundle those common risks in a way that makes sense for how small businesses actually work, instead of treating liability and property damage like two separate planets. It assumes if you've got a location with people walking through, both risks are in play. It's meant to be straightforward and proportional, not built for rare or highly specialized situations. That design matters because most small businesses don't need multiple overlapping policies early on. You're not running a manufacturing plant with 1,000 moving parts. You're running something local with predictable day-to-day operations and a space that's easy to wrap your head around. The BOP focuses on stuff that actually comes up, not hypotheticals that probably never will. Think about an office. The work itself might seem low risk, mostly admin or professional stuff, but the space still exists and people still interact with it. A client trips on a loose cable during a meeting, or a delivery person dings a wall, an employee knocks over something and floods the suite next door. None of that is dramatic, but it creates responsibility and costs money. A business owner's policy handles these moments without needing a separate policy for every exposure. On the property side, the policy also accounts for the fact that you might not own the building. Lots of small businesses lease and then pour money into making the space functional. New floors, built-ins, custom counters, updated electrical, you paid for all of that. If something damages the space, those improvements don't just vanish because your name's not on the deed. The policy anticipates that split between you and the landlord, which newer owners sometimes miss. Another thing, downtime. When something goes wrong, the visible damage is only part of it. If you can't operate normally for even a few days, that hits revenue. You might need to pay stuff, customers might go somewhere else. Vendors may still expect delivery windows or minimums to be met, and you may have to decide quickly whether to pause operations entirely or find a temporary workaround just to keep things moving. For small businesses, short interruptions often hurt more than long-shot disasters. A policy ties operational disruption to physical losses instead of treating them separately. Now, it's worth understanding what a business owner policy isn't for. It's not built for highly specialized operations with unusual risks or complex liability. Heavy manufacturing, professional malpractice, a fleet of trucks, intricate contracts, that stuff usually falls outside what this policy is designed to cover. That doesn't make it weak, it just means it's focused on a specific type of business risk. That's why eligibility isn't just about how much money you make or how many people you employ. It's about whether your operation is straightforward and predictable. A small contracting office might qualify, but the actual contracting work gets covered differently. A restaurant might fit, but certain equipment or activities could push it out of scope. If you've been in business a while, this sometimes shows up when you've expanded or added services without updating your coverage. Nothing broke, the business simply outgrew the assumptions the policy was originally built around. For a lot of owners, the real benefit is just simplicity. Instead of managing a bunch of separate policies for basic needs, you've got one framework handling the most common issues. You still have to make decisions and adjustments, but there's less friction. Less time spent worrying about overlap or gaps, more time making sure things actually match how you run today. The policy sits there while you work. When something does happen, it's usually annoying, not catastrophic. A repair, a claim, a few days of hassle, then back to normal. The goal isn't to plan for every nightmare scenario, it's to handle the common stuff in a clean, predictable way. Where people get tripped up is thinking a business owner's policy is either way broader than it really is or way more limited. Really, it's narrow on purpose but practical in execution. It focuses on risks that small businesses run into regularly, not every possible thing that could go wrong ever. As your business grows, the fit can shift. Adding a second location, carrying more inventory, changing how customers interact with your space, taking on new contract work, all of that can push you past what the original policy assumed. That's not a failure, it just means your insurance should evolve with your business instead of staying stuck in the past. The best way to think about this is to connect it to how your business actually runs day to day. Where do people enter? What property do you need to operate? How would a short shutdown affect revenue and payroll? Who could reasonably get hurt or affected if something went sideways? If you don't have clear answers to those questions, that's usually where gaps show up. Those are business questions first. The insurance just follows from there. Bottom line, a business owner's policy works well as a starting point for small, straightforward operations, especially early on or when things are stable. It's built for ordinary liability, ordinary property, ordinary operations. If that describes your business, it's an efficient way to cover common risks without overcomplicating things. If you outgrow those assumptions, that's your cue to reassess and adjust. Not a problem with the policy, just part of running a growing business. I make videos breaking down insurance in plain language, so if this helped, hit like or subscribe to catch future ones. Thank you for watching.